Good afternoon, traders and investors. Will back here with another one here, coming to you after Wednesday's close here, guys. And we did have another green day on the markets, now marking 9 days where the bulls have successfully pushed to higher highs in the markets. But a few cracks are appearing in the bulls' armor here. So we'll be taking a close look at our lower time frames here to determine when the pullback could potentially be starting, as some of our bulls are encountering some resistance at this point. But there has been a very, very beautiful rally in the markets, and there are still a lot of great opportunities, guys, to be had buying the dips in solid companies here. So in today's video, we're going to cover a few earnings that I got for you guys today. We have Disney, we do have Roblox as well, and lastly, we're going to cover one of our payment issuers here in the form of Affirm. So we're going to be covering those three earnings. We're also going to be covering our major indexes, of course, our major technical analysis for our major tech names here, and lastly, a quick glimpse into my portfolio, guys. So without further ado, let's get right into today's video. As you can see, most of the indexes here, major indexes, SPY, QQQ, XLF, XLV, did end up pretty flat on the day, etching out some green, but the Russell is pulling back significantly here. So growth stocks kind of leading the way down into the early signs of a pullback here. So if we take a quick look at the heat map here, you will see that the market is getting less and less broad by the day. Most of the market, once again, upheld by our big tech names, and that has been the story over the past 2-3 days, guys, as the rest of the market not performing too well. So we do have some decent rotation here to the downside from our other sectors, while major tech continues to uphold SPY and QQQ here. So once our major tech names start pulling back, guys, that will probably be the signs of a broader market pullback here, as the rest of the market has kind of advanced on that decline already. Now, on the one-day relative, you will see that only a few sectors here were in the green: technology, real estate, communication services, and industrials, and the rest of the market red, led down by energy. Once again, the price of oil continuing to fall. And in terms of the yields, guys, the yields are still falling, which is good. This is exactly what we wanted to see, guys, in terms of having broad market support here for our equity bulls. The yields are now in a steady daily downtrend, and we are looking for a potential setup for a weekly downtrend, as well, as this has been one of the biggest pullbacks here ever since last pretty much March, right? So very, very, very good pullback in terms of the yields. That's exactly what you want to see if you're a longer term equity bull here. And as you can see, our TLT 20-year bonds finally setting our first daily uptrend here, guys, in a number of months here, ever since the month of August pretty much. So very excited to see if the bulls can transition this into longer term gains for our bond market, which would signal a very green light for equities for the next 6 to 12 months here, guys. So before getting into more technical analysis on our indexes, let's get into earnings right away. And we are going to start it off with one of the big ones, guys, Disney. And Disney has been a stock that a lot of people have asked for on the channel here. And I've said a number of times that it could be somewhat of a value trap. They are not, even though the share price is down significantly off of all-time highs, guys. We're talking about, 58% off all-time highs and all the way back to 2014 prices here. But it's not so cheap anymore, as the company has had a significant drop in earnings per share. Now still trading at a PE ratio of around 68, 69. And you can see, guys, the PE ratio, the PE ratio has come skyrocketing higher after your net earnings, net income has been significantly down. This is a company who used to produce, $12, $11 billion worth of profit per year prior to our pandemic years. Obviously, their cruise line and park experiences got crushed during that time, and they made heavy investments into streaming and franchises during that time. So costs have gone up. Revenue has come pretty much down, or has been significantly flat, and the company has not been able to regain some of their profit that they had prior to 2020. So that is the story for Disney, guys. So we're going to take a look at the earnings to see if it was any different. Well, on this quarter, guys, they did have an actual beat here. And I did listen to, there was a quick interview on CNBC after the close with CEO Bob Iger. And although he did seem quite bullish, there are still some cracks in the company per se. So let's take a look at their earnings, guys. They did have a nice little beat on EPS here, a very, very, very short fall compared to their earnings that they used to have a few years ago, where they were putting in several dollars of earnings per share. Now still under $1 in earnings per share. And in terms of revenue, they had an ever so slight miss on revenue here by about $130 million. Not that big of a miss, but good enough to keep Disney up in the after hours here, guys. You can see that they are up in the after hours over 3%. So decent enough to maintain the gains here off of our lower levels down to 79.80. So what exactly happened on the call here? Well, let's take a look. Disney expands cost-cutting plan by $2 billion, which is very, very good. You need to see them cut more and more costs, post better than expected profit here. And most of that came from their streaming division here, guys. So Disney, so profit topped expectations, but revenue came up short, which we saw. Ad revenue slumped, but the streaming segment narrowed its loss. This is the major contributor here to your potential profit segment here. It's their up and coming growth segment, and the company has now divided themselves into three tiers pretty much. You now have its experiences division, its sports division, and we have another one here, the entertainment division, obviously, from their movies and franchises, right? So let's take a little dive into Disney earnings and see what it has. So Disney said it plans to continue to aggressively manage its cost base, which is a very, very crucial element for Disney in the foreseeable future, increasing its cost-cutting measures by an additional $2 billion to a target of $7.5 billion. So they're doing a good job of trying to mitigate costs as best as they can as the rest of their divisions continue to try and recover prior to 2020, right? We obviously know that their parks and cruise lines got heavily hit. And now, although they're back to operating conditions, guys, unfortunately, the economic conditions are not what they were prior to that, right? Consumers have less of discretionary money, which means that they're spending less and less on potential trips to Disney parks, and especially cruise lines as well, which are fairly pricey, right? So they did have a nice little pop in the after hours here, mainly due to this. The company added 7 million new core Disney Plus subscribers from the previous quarter. Very, very good, bringing its total number of users to 150.2 million. That is very, very good. They beat the estimate here, guys. The estimate was around 148 million. Very, very decent beat on its streaming business here. And you can see, right, the revenue was slightly lower here. The EPS was higher, but the real kicker was in the subscribers. That's the main reason why the stock was up in the after hours here, right? So the company reported a net income of 264 million, which is very, very low, guys. These guys used to be putting in like $2-3-4 billion a quarter prior to the pandemic, right? So now to see that at only 10% of what it was, that is one of the major flaws that Disney is currently dealing with now. They need to continue to reduce costs and their cost spending, right? What they're spending to increase their lines of businesses, especially streaming, which they've made heavy investments in, needs to start tailing down to the downside here, right? So, you know, all in all, guys, not a bad report from Disney here, but I would like to see a bit more endeavors here in terms of guidance, right? We really need to see guidance as to how they plan to reduce their costs in a lot of their business segments here. And we also need to see that they continue to have pricing power in their parks and experiences here. Here's the thing, right? Disney's experience division saw revenues jump 13% to 8.16 billion during the quarter as parks saw higher attendance and ticket prices domestically and abroad, right? So they are increasing ticket prices, but a problem with Disney, guys, is that I don't know if you've been to a Disney park recently, but they've monetized most of everything that they can in their parks. So the pricing power of Disney in the parks is kind of getting to an exponential curve here to where they can't really continuously linearly increase prices. It's just not sustainable for them. People will eventually stop spending that money for parks and experiences. There's only a certain limit that people are willing to spend for their hotels, their cruises, and their park entrance fees before it becomes too much and before consumers start going potentially elsewhere and replacing those experiences with something different. However, what is doing very, very well, guys, I will admit, guys, is their entertainment segment here, right? Which includes sports, right? And experiences. The sports division here, ESPN, is very, very, very strong. Now, a question that came up in the call was whether or not they were going to go for the rights to the NBA. As you guys know, ESPN has the rights to a lot of sporting franchises, but not yet the NBA. So we'll be very curious. Bob Iger said he was very bullish. He said there's a very good relationship between ESPN and the NBA, that there's a very good symbiosis between each other, that they can kind of fuel off of each other to make themselves better, but there was no concrete plans yet. He didn't answer the question in terms of a yes or no, whether they were going to strike a deal with the NBA to get those exclusive rights to those games here, which could be very, very big for Disney here. So a couple problems with Disney. The pricing power in the parks is nearing its peaks, right? Also, their streaming business, although it is getting quite large, it's just not yet profitable enough for the company here, right? And lastly, it's franchise fatigue. So their main franchises, Star Wars and Marvel, have put out a bunch of movies over the past 10 years, and those franchises as well are kind of hitting their peak. Don't forget, it cost them a lot of money to make those movies, guys, anywhere between $200 to $400 million to make those movies. And if they're not able to make at least a 2x on those movies, guys, as the franchises hit a bit of franchise fatigue, well, it's not going to be a worthwhile endeavor for them to continue to pump out those movies. And people are kind of having, people are kind of got enough of those franchises over the past 10 years. So now they really need to focus on potentially new franchises here. So very decent report by Disney here, but I will remind you that their financial position is not the greatest here. And that's why I've avoided the stock even at these low prices. I don't want to build that large of a position in the company until they prove to me that they're ready to go back to their 2018, 2019 segments here. And as you can see, guys, look at the amount of debt that they've garnered ever since 2019, right? A lot more long-term debt on the balance sheet here. Not that great. They also cut their dividend almost entirely after 2020. And now the dividend is completely gone here. So no more real value to be had in Disney at this point in time. It's very unfortunate, but Disney is going to require a turnaround story. And in my opinion, it is not going to be an overnight thing. So that's company number one. Company number two we're going to cover is Roblox here. So let's take a look at Roblox, guys. Roblox popping nicely. They reported earnings before the market opened, and we're up about 12% off of the news. So what exactly happened, guys? Well, Roblox had a double beat here. They beat on EPS by about 10%, and they did beat on revenue. My problem with Roblox, however, even though they're trading at a very, very decent discount here from the all-time highs, about 75% off of the share price here, right? The problem with Roblox, guys, is that their valuation is very high in terms of $24 billion in terms of their market cap, and their earnings per share is just not positive yet. Look at this negative net income here. You can see on a quarterly basis, not growing revenue that substantially. On an annual basis, they are, but the revenue is kind of stagnating here, and their losses are not coming down high enough. So Roblox is said to still be unprofitable through 2025. That is absolutely huge, guys, and that's one of the reasons why I tend to avoid this company. Yes, I do like what they're doing for the whole gaming industry, but they are kind of a one-trick pony at this point. So let's look into their earnings here. Shares of Roblox pop 11% after company's third quarter results beat estimate. Yes, this was mainly due to their average daily users, which was very substantially up. Reported 70.2 million average daily users, up 20% from a year earlier. Very, very decent growth in terms of their user count here. However, guys, there are a few problems with Roblox here that I will raise some concerns on, right? So let's go more into it here. The company generates revenue from sales of its virtual currency called Robux, which it's kind of like Fortnite, where people spend V-Bucks to buy pretty much skins and in-game items for their characters here, for the in-game features. So very, very decent growth in terms of their active daily users. The problem is the quality of those active daily users, guys. So we have to look a bit more into this, and I'll bring this up in a short little while here. So you'll see the company reported another net loss of $277 million for the quarter, which ended September 30. They reported a net loss of around $300 million for the same period of 2022. So the company is reducing its losses, guys, but not fast enough for my liking here. And here's the quality of their users here, guys, right? Roblox users age breakdown here for fiscal year 2022. You can see that most of their user base is under the age of 17 here. So if you look here, right, under 9, 9 to 12, and 13 to 16 represents pretty much 65% of their entire audience. Only a fraction of their audience here is over the age of 17. And you guys know that that is not where your most amount of spending power comes from your users, right? So this is one of the main problems with Roblox is they have a very young customer base, and being a young customer base is not the customer base that pays for the items in the games, guys, which is why they're not being able to drive as much revenue as they can from their platform here. Another problem that I have with this company, guys, is the fact that they're pretty much a one-trick pony. If you look at the rest of the market here in terms of your valuations here for other gaming companies, guys, this is pretty much April 2023 and November 2021. So the most important one here is April 2023, which is the blue line down here. You will see that all of the companies that they're competing with, guys, have several different titles under their belt that they can rely on being cash cows. Look, up here you have Activision Blizzard, Nintendo, and EA, some of our main gaming companies in the world. And then you have Roblox in position number 4 here with a market cap of almost 24 billion. But the problem is, guys, they only have one game. right? If the game ever falls out of style or people stop playing it for XYZ reason, or the trend shifts to something new and more flashy, well, this is going to severely hurt Roblox. They're not in a position where they are a well-diversified gaming company yet, and a lot of their money is not being spent properly as well. You can see that the utilization of each dollar spent on Roblox worldwide as of August 2023, right? Well, here's the problem, guys, is that they pay a lot of money to App Store fees. This was a problem that Fortnite was having with Apple and Google, why they pulled their app from those marketplaces back about 2 years ago at this point, right? So they're still making heavy investments in the platform. They still have to pay an astronomical cost in terms of hosting their platform and support, because they outsourced most of this. Most of the hosting and the investment is not done in-house by Roblox. It is outsourced. So they have to cut costs here. And obviously they do have developer fees too. There's a lot of miscellaneous fees here, guys, that they should be trimming down here. You can see that they only bring 7.1% of the money that is spent on Roblox to the actual game franchise, guys. So a lot of miscellaneous expenses here, a lot of miscellaneous costs that they have to get under control if they want to maintain a course to profitability. As of now, guys, no course to profitability within the next 3 years, and this is a problem that this company has, which is why I do tend to avoid them. I do tend to play them sometimes in terms of with put options, trying to get in and out of the stock, but building a long-term position in this company, unfortunately, is just not for me at the current time. And now lastly, we're going to cover Affirm. So Affirm, one of our buy now, pay later plays, which was very, very hot in 2020 and 2021, obviously because rates were zero, but now the stock is pretty much off 87% from the all-time highs and trading roughly at a $21 range right now. You can see their market cap has plummeted here all the way down to $6.5 billion. So let's take a look at their earnings that they reported. They actually had a nice little boost in the after hours here. You can see that they're trading up over 10-11% in the after hours. Why? Well, because they did have a decent little double beat here. So earnings EPS beat here by about 18%, and they did beat on revenue by about 12%. So decent beat all in all. But you can see, guys, that Affirm is another company here struggling with profitability. Yes, revenue is going up substantially, but this company will not be profitable once again through 2025. And you can see their revenue over the past 5 quarters is virtually flat, guys, increasing ever so slightly, but not really ramping as much as you'd like to see for a growth company in their segment here. So profitability is something that's plaguing Affirm, obviously in a high rate environment. You cannot generate loans as much as you could before in 2020, 2021 when money was free. Quick disclaimer here, guys. I actually bought Affirm is partnered with a lot of major manufacturers here. They are partnered with Apple. You can actually get a loan here and buy your product now and pay over time with Apple. You can even do it on Amazon as well. So quick story here. Back in 2021, I was able to buy a brand new MacBook Air, and I did that using Affirm here because they were charging 0% for 12 months here on iPads, on iPhones, and MacBooks as well. And as you can see now, the rates are significantly higher now. They're no longer free, so you can no longer get in the door for 0% interest. The iPhones, Macs, iPads, and whatnot are all significantly higher. So iPhones and Macs, the Apple's 2 best performing segments here, are 8% interest rates here. So yes, it's better than putting it on a credit card, but still very, very high interest rates and very, very hard to get people to actually bite on those here. So Affirm with some decent earnings here. Affirm stocks pops after earnings, bring narrowing loss, big revenue beat here. So very, very decent little beat here. Give me a quick second. Right, the CEO even says, we're prepared to grow our business at pace while managing credit in the higher for longer interest rate environment. So they acknowledge the fact that we are in a higher interest rate environment, that consumers are less likely to get loans with Affirm. So unfortunately, the company is not going to be growing very, very quickly in the higher for longer environment. They're just trying to maintain market share and continue to increase their partnerships with companies like Apple and Amazon here. So here's the major takeaway here, guys, right? We believe that the important takeaway from this quarter is that having done the hard work of adapting to interest rate changes over the course of the last year, we are prepared to grow our business at pace while managing credit in a higher for longer interest rate environment. So that is the gist of the report here today, guys. Yes, they're trimming their losses, right? They posted their first quarter net loss of 172 million compared with a loss of 251 million in the prior quarter. So their losses are coming down, but still not profitable here, guys, right? They did note a modest seasonal increase in delinquencies as well, which is not very good for the company as well. The same thing that the credit card manufacturers have said, but they did have an increase here in They did have an increase here in total volume, in terms of volume of buy now, pay later payments that they were forecasting here, coming in at 5.6 billion, above the estimate of 5.4 billion. So they are beating estimates, but keep in mind, guys, they have been guiding lower for the past year. So these are beating estimates on lowered guidance. It's not as if they're really shooting for the moon here. And lastly, for Affirm, what I did want to cover is, if you guys didn't see it here, is last week they had a new partnership with Amazon. They've been partnered with Amazon now for about a year and a half, but now they are doing it for small business owners here. So Amazon unveils buy now, pay later option from Affirm for small business owners. If you guys haven't seen this here, guys, you may have seen it before when you check out with Amazon. This little screen here, you can pay over time with Affirm for a number of different products, but now they're doing it for small businesses as well. However, the problem is, I'll tell you right here, right? If approved for small businesses, users can pay Amazon for purchases in equal installments over 3 to 48 months. They are charged an annualized interest rate between 10 and 36% based on the perceived risk of the transaction, right? According to their chief revenue officer here. So that is, you know, even though they are getting approved by Amazon here to partner with them, these interest rates, guys, are not really helping anybody. They're not helping the consumer, and even Affirm, it's very tough for them to get business at these rates, right? So it's very unfortunate, but that's just the way it is right now. It's a very noble cause for the company. They are more transparent than credit card issuers, but unfortunately, guys, just not enough for Affirm right now here, which is why the company continues to be plagued here in terms of their share price not able to rise a lot. Investors and institutional investors are really starting to look for companies with profitable EPS and paths to profitability. And unfortunately, as long as Affirm stays in this higher for longer rate environment, their path to profitability is extended a few years longer now. So that's pretty much it that I had for you guys in terms of earnings today. Let's get into our major indexes. We're going to run through major indexes and major tech names fairly quickly here, guys, just because nothing much has changed, right? We've always been looking to set daily higher lows as soon as this pullback starts. So what do I want you guys to look at? Well, we need to be looking for the loss of the hourly trend here, right? Okay, so hourly trend is going to be key here. Tomorrow, if we lose today's low in the form of 435, we will be setting an hourly downtrend here, and that is when your daily pullback will start happening here. But as long as we don't lose the hourly trend here, well, bulls will remain in control of this chart. So the daily pullback will only be starting once you have a loss of the hourly uptrend. I'll remind you, your 4-hour conditions do remain here overbought here, and we are running into some resistance areas on the SPY. So it remains to be seen if the bulls can continue this 9-day push any incrementally higher here and start closing above this area, come and sit on it, and then move for the daily trend change here. Or if we pull back right away, keep an eye on this lower pocket right here, 431, 432 is the likely area that I think we may pull back onto. But bulls looking very healthy, guys, looking extremely healthy on the weekly charts as well with that V-shaped recovery of this last move. So no red flags for the bulls, but we are still looking for your daily trend change. Now, QQQ, same thing, still looking for the daily trend change, still closing above this downwards trend line here, right? And we are moving up into the area of resistance for 374 up to 381 is going to be that area. Same thing for the bulls. We are still slightly overbought here on the RSI, as you can see down here on the 4-hour time frame. And the 1-hour chart has still not set an hourly downtrend this entire time, right? Still no hourly downtrend, still in full control by the bulls right here. So tomorrow, if we cut today's low, 370.7, that will be the start of your daily downtrend consolidation here. I will be looking to this area here to provide some support. 368 all the way down to 365 is the pocket that I'm looking for. So we will see, can the bulls continue marching higher and potentially set the higher lows right here and just bounce right here and set them up there? Or will they start pulling back right away as of tomorrow and to the end of the week and potentially set them right down here, down in this 366, 367 pocket where these moving averages may be able to catch up to the markets right here. So just looking for the daily higher lows, but I'll reiterate, bulls looking extremely healthy for this weekly trend reversal into the end of the year as well. And now XLF Financials. XLF Financial, same thing, just looking for the daily higher low. XLF Financials, you can see this is consolidation. Even though we haven't pulled back much, this is your daily bull flag. Now 4 days pretty much trapped in the same range here, trapped between $34 and $33.60-ish, right? So that's what you want to see. You want to see the bulls come up very hot and then pretty much hold their ground, not give back much ground whatsoever. This is exactly what we want to see in terms of daily consolidation. So we're still just looking for the daily higher low. Obviously, a break of 33.93 will just be a daily uptrend confirmation. We still haven't confirmed the daily uptrend, still looking for it. So if we continue to pull back, still looking for that daily higher low, and then for the daily trend change here, bulls looking very healthy, looking extremely healthy on the weekly as well. That's no secret at all right here. So we have an engulfing move on the weekly as well. And then we will be looking to target the $35 range for continuation into the later part of the year here. So very, very healthy consolidation by the bulls on XLF. I like to see them holding ground here. Now let's move down to healthcare. Healthcare as well, consolidating ever so slightly, kind of sideways here. You can see inside trading day here, went up, went down, but pretty much closed right in the middle of the last 2 trading days here. So still looking for your daily high or low. The moving averages are acting as decent support, and now you have decent support, 127 down to 125. So if we continue to pull back, looking for that daily high or low here, you're just going to be looking for it and then to set the new daily uptrend. All of these trends have to set the daily uptrend renew here, guys. And on the weekly, guys, the weekly bounce is very, very nice underway here. You can see that in terms of the move that we've recaptured from our last leg down, we're over 62%. So the bulls are really set up nicely for any pullback on the weekly to translate into a weekly higher low as well and set a weekly uptrend. Have not had a weekly uptrend in XLF pretty much since the month of May and June here. So very curious to see if they can get it done, but bulls working with a decent amount of space still, no red flags. And IWM is one sector here that's leading the way down. You can see that they covered one of the gaps here between Thursday and last Friday here. So coming down ever so slightly back into my sweet spot, guys. If we continue pulling back into my sweet spot into tomorrow, I will be writing some options here next week, potentially targeting 166 to 165. This is the area that I want to target on IWM Russell. I think the bulls have created a lot of space here to potentially form the cup and handle and give me a daily trend breakout here. We have not had a daily uptrend on the Russell since pretty much the month of July all the way back here. So curious to see if the bulls can do it. In my opinion, they definitely can here, guys. And we will just be looking for weekly continuation to the upside here, potentially trying to reverse more and more of this weekly downtrend here. No red flags for the bulls so far. This is healthy consolidation, in my opinion. And we do have a lot of support down here, guys. The 168 level is decent support, and we have our moving average support right here as well. So I will be looking to buy these dips on the Russell for the potential daily trend change. And lastly, our Dow Jones here. Dow Jones also consolidating somewhat sideways here. We are in the resistance zone, guys. This green box, 34,300 all the way down to 34,000. This is the resistance zone. You can see the bulls have been struggling to push gains. It was so easy back here, and now we're kind of struggling. So this is sideways action, right? Trapped in this price action right here. Very, very good consolidation though, guys. I like to see the fact that even though we've been consolidating, the bulls are not willing to give back too much of the gains already. Obviously, this area right here, 34,000, is now acting as your level of support. We do have nice moving average confluence down here. So if the bulls do pull back a little bit more over the next few trading days with a broad market pullback here, expect this area right here, 33.7 down to 33.6. That's going to be your little pocket of support where I do think the bulls are going to find some support to potentially smash through this area. If they continue going, so be it. We can set the daily uptrend like this and then reverse. But if we pull back from here, guys, expect a little pullback into this area, and then I would not be surprised if the bulls take back over here and start moving higher and higher on this weekly time frame. Bulls engulfing the weekly move, so looking very healthy, no red flags. And now, guys, let's move on to major tech. Major tech almost in the same situation, guys, not pulling back an inch so far for the most part here, so we are still good in that respect. So daily uptrend here, not confirmed by Apple just yet, right? So Apple, this is one move higher. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9 days on Apple as well with the rest of the market. So this massive daily move, guys, is beautiful by Apple, but still have not confirmed the daily uptrend yet. So any pullback at this point will just be to confirm the daily uptrend now all the way up into the 182s. So any little pullback here, potentially below 180, guys, I will be looking to write some puts. 176, 175 is the area that I will be targeting. And Apple doing a great job now of engulfing your most recent weekly move. So the bears downtrend is now annihilated by the bulls. They have now engulfed the most recent weekly move. So any pullback here on the weekly chart will just be for a weekly higher low to potentially set a new weekly uptrend. Apple has not been in a weekly uptrend since losing it back here in July off two quarterly earnings ago here. So very curious to see if Apple can do that. In my opinion, they can here. They did manage to set pretty much the monthly higher lows at the lower 165, 166 area. So I do think that Apple will be set up very beautifully into the end of the year. We are just looking for a pullback at this point. No red flags. AMD, much of the same, guys. So AMD struggling in this area, guys. You can see why. They're struggling in the 113 area. It's been a very, very contested area for the past, all of July and pretty much all of June as well. So they are pretty much chopping off at the end of a very, very explosive move here. You can see that they're still overbought on the 4 hours. The legs are getting smaller and smaller to the upside. So it's very possible that we do get a little bit of a rollover soon here. but I'm not concerned in the slightest, guys. If we do roll over, target this area right here, right? 109, 108. It's going to be a nice pocket. It was previous resistance. The moving averages are going to be there as well. So if we do come down into the 110, 109 area, I will definitely be looking to write more options of AMD. 107 down to 105 will be my sweet spot to be writing options there. Would not mind picking up more shares on this little pullback. No red flags for the bulls whatsoever. This is very, very strong. Looking for the daily higher low, daily continuation. And you guys know AMD bulls are fully in control of the weekly as well. Weekly uptrend is started. So any pullback is just going to be for a weekly higher low. Anything above 93 is going to do it for weekly continuation, because the bulls are now starting to turn the corner on the monthly, looking very, very good in the long term. No red flags on AMD either. Amazon down 0.44%, but that's okay, guys. They've made such a monstrous rally that they are also potentially starting into consolidation mode. You can see that the legs are getting smaller and smaller and smaller to the upside here. So Amazon potentially due for a little bit of a rollover. The RSI is now becoming is now still overbought on a little bit here. And so if we are looking for a pullback, guys, where are we looking for a pullback? I'm still targeting this 137, 136 range right down here, right? Would be pretty healthy consolidation for Amazon, in my opinion. So no red flags on Amazon. Daily uptrend is going to be confirmed by the bulls. I'm pretty sure of that. So just looking for the daily higher low and then daily uptrend confirmation here. And on the weekly, you can see the bulls have completely recaptured this weekly downtrend from the bears here. The bears had it for all of 1 week, and then the bulls simply reversed here. So bulls looking very, very healthy. Any pullback on the weekly is just going to be for a weekly higher low, for a weekly uptrend reversal, in my opinion. And now the monthly higher low is also set on Amazon here, pretty much at 118. So monthly higher low, and now monthly trend is resuming to the upside. So no red flags whatsoever. Would not be surprised if Amazon does crack new 52-week highs here in the next few weeks, indeed, into the end of the year. Very good performance by Amazon bulls here. Now let's move down to Google. Google performing very, very well as well, up another 0.65%. So Google just grinding the levels higher here, guys. I've sold my shares at around this line right here, 130.38. A little bit early, guys, but I was expecting a broad market pullback, but the bulls have just continued to grind higher this entire week pretty much. The pullback is coming, guys. It's just a question of when, right? Timing is always the hardest part of the markets here. You just have to look for overbought conditions, but sometimes they can stay overbought for a bit longer. So I was a bit off on my Google, but very happy with the profits that I did secure. If Google does come down a little bit, I will be looking to repurchase my Google between 130 and 128 pretty much. So they are going to be looking to set the daily higher low. This area is going to be a very good area of support. It was support in the past, resistance in the past back here. So I do think the bulls are going to use this area once again as potentially an area to set the daily higher low to start a new daily uptrend here after losing it after their earnings here. So bulls looking very, very healthy. I love the size of this bounce, looking for the daily higher low. And even on the weekly, guys, I love the size of this weekly bounce. Bulls are recapturing so much of this weekly downside after earnings move that it would not surprise me here if the likely scenario becomes the reset of a weekly uptrend if they do go into extended daily consolidation, potentially sideways for a while. That would be a nice little reset on the weekly for the bulls for a potential weekly trend upset here to the upside here. So very, very nice performance by Google overall. No red flags for the stock or for the technical analysis here, in my opinion. Now let's move on to Meta. Meta as well, guys. Meta performing very, very beautifully here on the day, up another 0.3%, just grinding higher is Meta. That's been the story of Meta, but you can see these legs trying to kind of getting smaller and smaller, right? So it's a question of when will this market top out, and when the pullback happens, how deep will the pullback happen? I'm not expecting that deep of a pullback, guys, on most of major tech, because major tech has done leaps and bounds ever since the past 2 weeks, right? So keep an eye on this, guys. Meta shares are due for the daily higher low eventually as well. So any pullback here will be pretty much, in my opinion, within the 310 all the way down to 300 area. Target this area, guys. We do have the moving averages slightly higher, so very, very decent support to pull back into. Still need to set the daily uptrend. Meta looking very, very healthy, guys, as it continues to grind higher towards its 52-week high levels. And even on the weekly, guys, Meta looks very, very, very bullish on the weekly. No red flags for this stock whatsoever. And the monthly pretty much consolidation is all but over, in my opinion. If you crack your new 52-week highs, that will be your monthly uptrend confirmed on Meta at this point. Meta with such beautiful earnings, guys. Can't really say anything bad about the company here. We are just looking for the 52-week highs. Now, can they set it in one clean shot here, or are they going to have to two-step it? In my opinion, the two-step will be more likely. So look for that pullback. Meta still slightly high for my liking, in my opinion, so I won't be adding. I would like to add shares here pretty much down in this area, but unfortunately we're off that area, and I don't think we revisit that area anytime soon. So Meta bulls, congratulations. Very, very beautiful technical performance, simply grinding higher. And now Microsoft, Microsoft, guys, just absolutely explosive, right? 0.74, Microsoft just completely dominating the market right now, almost setting new 52-week and new all-time highs, right? Crack of 365 is going to be that. We're not that far off 365, guys. 363.20, beautiful performance by Microsoft, but daily is a bit overextended right now. The 4-hour is still extended right now, right? And you can see the bulls are potentially getting tired, even though they're grinding the heck out of this 12. Look at that 12 EMA grind, guys. It's just absolutely beautiful, right? But all good things will come to an end eventually. Microsoft can't do this forever, right? So when we do pull back, guys, well, no red flags. Just looking for the daily high or low. Target this 12 EMA if we do pull back here, right? 352, 355 could be a very beautiful area for a potential higher low before resuming the trend to the upside. No real reason for Microsoft to slow down, in my opinion, unless it's due to general macro slowdown, general macro pullback. But Microsoft in a league of its own right now. It is our lead bull in the sector right now. So just looking for the daily uptrend continuation here. The bulls are in full control of everything, guys. Full control of the monthly right here. Look at this beautiful monthly breakout. They're also in full control of the weekly time frame, reversing into a weekly uptrend. Microsoft finally in a new weekly uptrend here, and daily bulls are just in absolute full control. So at this point, just have to take it step by step. Just look for the pullback eventually, daily high or low, and then we're going to be looking pretty much for 52-week and all-time highs. Very good performance by Microsoft. And now NVIDIA, guys, performing very, very well, guys. 1.35%. NVIDIA coming all the way back up to a very hot weekly level here. So beautiful performance off the lows here, as you can see. Any pullback is just going to be for a daily high or low. Target these moving averages, maybe anywhere between 450 and 445 at this point. The lower part is pretty much 435, which would be this horizontal line of support. NVIDIA creating a ton of space off the bottom, so the bulls are very likely to set a new weekly uptrend here. Keep in mind, earnings in 2 Tuesday. So looking forward to that. And on the weekly, guys, you can see why is this level very hot? It is your previous weekly lower high that the bears had, right? So going to be looking to potentially smash that. If the bulls can smash 475, well, they will negate the weekly downtrend and potentially set themselves up for a new weekly uptrend into the end of the year and into 2024. So looking forward for that for NVIDIA. Earnings is going to be absolutely crucial for that, in my opinion. So what I want to see bulls do before earnings is I really need to see them hold this 435 level. I don't want to see them trade below that. It opens the door towards downside if ever earnings doesn't go as planned. I do believe earnings should be fairly bullish on the stock. I would just need to see them hold 440, 435, set themselves up nicely for earnings here, and then potentially we get a nice little rise above here. Potentially start revisiting some of these higher 400 levels here. But very, very good performance, by NVIDIA stock in the past 9 days, really recovering here from potential disaster at the lower levels. And now our three last ones, Tesla here. So Tesla performing fairly well here today, guys. Nothing much to say. As you can see, Tesla consolidating more than most stocks, guys. You saw all of the other charts have pretty much been straight up for the last 9 days. Tesla has actually been flat for the last 4 days. So Tesla potentially consolidating before the rest of the market. This is why I haven't played Tesla this week. I saw the rest of the market continue to grind higher and Tesla's kind of flat, which leads me to believe if the rest of big tech consolidates, then Tesla may consolidate a bit further. And I'm looking for the daily higher low. If Tesla's an anomaly and the rest of the market the rest of the market pulls back and Tesla moves higher, well, then so be it. But I'm somebody who kind of looks for correlation here. So I'm looking for Tesla to potentially come back down here into the lower 210s area. If we come back into the 210s, I will be writing options around the 205, 200 level. That's where I want Tesla stock. It is still in my sweet spot, and we are still looking for the daily trend reversal here. So just looking for your daily high or low, bottom out here, but I don't trust it because the rest of the market has not pulled back yet. That is why I can't say that the daily high or low is set and we're looking for daily higher highs. So just keep that in mind when looking for Tesla over the next few days. But I do like the setup though, so still just patiently waiting for the daily higher low, using this 12 EMA as support down here, and still not a lot of space to work with here, guys, off of 194 for the bulls to use this to set the daily higher low for the daily trend change, right? So looking for that daily trend change on Tesla, that's step number one, because obviously bulls do not control the weekly anymore. Still just looking to create as much space as possible in relation to 268. But keep in mind, guys, once we do get that, the next area of resistance, 230, 235, 240 is going to be this area right here. Very, very heavy area of resistance for Tesla bulls. So just keep that in mind. And now lastly, Palantir. And now Palantir and PayPal, right? So Palantir doing the same thing as Tesla after earnings, pretty much consolidating the past 4 days, but that's okay. It's exactly what we've been saying, guys. They are using this 18 level as support. You can see that right here. It's clear as day, right? Using this past level as support. Bulls refusing to give back too much ground, and that's very, very good, guys. Palantir really upping their guidance, upping their performance during earnings. I love their earnings call. Everything is pointing very, very bullish for the company, in my opinion. So now we're just looking for the daily higher low for future bullish upside here and looking to crack our 52-week highs. 2022 is going to be the mark. So as soon as daily consolidation is finished on Palantir, look for that rally, and next resistance is 2022 right here. And the weekly uptrend is obviously all to the bulls right now. So even on the weekly, if we do consolidate further on the daily for any which reason, well, we'll just be looking for a weekly higher low here. Look for the high 17 areas, right, to provide some very, very good support before a potential next leg up to start recapturing some of these 52-week highs. Very bullish on Palantir. No real red flags whatsoever, guys. And now lastly, PayPal. PayPal here, stock still struggling, is poor old little PayPal here, up almost 1% on the day. Still looking for the daily higher low here, guys. So like I've been saying, guys, the first step is to set the daily uptrend. Still have not set the daily uptrend. We've pulled back a little bit. We're looking to set the daily higher low, and then we need to smash 56.76, which is pretty much the high after this most recent earnings move here. So going to be looking for the daily higher low, crack this. If I can get a daily uptrend on PayPal, then perfect, right? We'll be starting to recapture some of this weekly trend here and start looking maybe like May and June here, where we did have the last weekly uptrend here. So this is step number one. I need to see step number one on PayPal. Not satisfied until I get it. I checked out the premiums here today, guys. The premiums weren't that hot for the remainder of the week, so may need to wait closer to the end of the week here and potentially look for a premium next Friday. But I am looking to write options between $52 and $49 as low as I can get. Perfect, because I do believe that this may be marking a temporary bottom for PayPal here, and we may be due for some nice upside. But step number one, need to set that daily uptrend here, and we still have not got it. So keep an eye on that for PayPal. And now lastly, my portfolio. Taking a look at the portfolio here, guys, you can see that we are still doing fairly good here. So for the year-to-date performance, still up 30.28%, and we are beating the SPY here. SPY roughly performing about 14% on the year. So we are pretty much 2xing the SPY, and we are in a tight race with the NASDAQ here without holding any of your major NASDAQ stocks that rallied 40, 50, 60, 100% plus like NVIDIA did this year. So very good performance here, recovering most of the losses of the last 2 weeks here with some very decent trading and some very decent premium farming here. So let's take a look at the positions here, shall we? So the positions still for the week here, guys, we do still have the same positions here. You can see that the Rivian calls are still in place, the 18.5s. Rivian significantly below that, so we will be able to close these at pretty much 100% profit and potentially write some calls for next week on Rivian as well. You can see the Airbnb puts are still in motion. I almost closed them this morning and yesterday morning for 10 cents, but I am going to ride them out, guys. Airbnb trading around 117, 118 right now. So we'll see if we get assigned for the 113s. Going to be unlikely to get assigned here, but if we do, I won't be mad at all. AMD is likely going to be the last week of AMD for me here. So we're going to take our gains and let these calls expire here and get our shares called away. I'll remind you that my cost basis on AMD is pretty much all the way from the $102 assignment here. Our cost basis is all the way down to $96.75. So very nice $525 profit on AMD after farming some premium here for the last few weeks here. So very happy about that. And now our new positions here. I did make a quick play here on CP. So Canadian Pacific, a railway company. I did make this play for next Friday here, the 72.5 puts. I love this company specifically, guys. It's one of the best stocks that you can possibly own in Canada here. I chose to play the US side because they have more options, but definitely a very good play here. Down at the lower part of the range, you can see 72.5 is pretty much this yellow line here. If I get a sign there, no problem at all. I will be looking to average down if ever we get down to 67, but CP has been in a big range and very decent to farm some premium when it gets to the lower levels, but the spreads are very tight, guys. You have to get pretty tight on the options, which is why you have to be fairly confident that we're in for a nice little reversal here. And after their earnings, we have a nice little daily uptrend potential setting up here. So that's why I wrote the stock for next Friday. If I get assigned, perfect. It's one of the stocks that I don't mind owning at all. And we also have some Disney here, wrote some Disney options for the earnings here, 79 puts. You guys saw obviously that Disney did good on earnings. So Disney up in the after hours today, currently trading around $87. So these should open fairly worthless tomorrow. So we'll be able to capture this $45. Nice little farming for earnings here. We also have the ELF 92 puts that we did write today as well. So 92 puts for $45 here as well, roughly 0.5% for 2 remaining days of trading. ELF had a very significant dip, was watching it all day. They had a nice little dip into the end of the day here, and I capitalized. So 92 would be all the way down here. If we get a sign on that, perfect. I am looking to own some ELF shares as low as I can possibly get them. And that would pretty much be the low prior to the earnings here, guys. And it's also a very, very decent area of support in the past. So looking to play it down there, fairly happy with this position. And now, obviously, we also still have the Fortinet puts. Those are still in play here, right? But largely worthless by now because Fortinet is currently trading around the $50 mark. So we should be fairly good on here. 47.5 is the lower area of my sweet spot that I want to own the stock anyway. So wouldn't mind being assigned even if I do, guys. So AMD will be called away. We're still running the UPS. We still have the PayPal here, not high enough on the East 2 to be writing covered calls. Rivian, we're still an owner of Rivian. CSIQ, I'm still in there, guys. Obviously not high enough for me to be writing calls. Canadian Banking ETF has been coming back as well. And we did make one play on the channel yesterday that I didn't show you guys because it's already closed. We sold some CELH 157.5s after earnings here for 93 cents. And we closed them pretty much this morning here for 10 cents, right? This was an automatic close, 90% profit here. So 1-day trade and captured all of this profit. So very happy with that. So all in all, a decent week of premium farming here in the account, and our major long-term shares that we still have assignments on are not dropping significantly here, just either holding par or slightly climbing here. So very decent week in the portfolio. So that's pretty much everything I had for you guys today. Hope you enjoyed the video. If you did, consider dropping me a like and subscribing to the channel if you're new, guys. We'd always love to have you. And as always, if you have any questions, macro, options, stocks, feel free to leave them down below in the comments and I'll answer you within the first 24 hours. So I'll see you guys tomorrow after the close. Not too many earnings tomorrow, but we will cover a few here, guys, as we wrap up earnings season, right? So we do have Unity, the trade desk. Trade desk, I'll definitely be looking to cover here. And potentially we may do Wynn Resorts or Fiverr. We will see which one is the most notable here, guys. So take care. I'll see you guys tomorrow after the close, and peace.